Passive income stocks are abundant, but there aren't many places in the world with great dividend stocks quite like the FTSE 100. The index is well known as one of the best income sources for dividend investors. In this video, we'll look at 5 of the top dividend stocks on the FTSE 100 to invest in for 2022. The companies on this list will not only yield attractive dividends, but are also expected to see share price growth over the year, with bullish sentiment and positive macroeconomic factors considered. So without further ado, let's get into the video. First on our list is Legal & General, ticker symbol LGEN. As of this video, the stock is currently trading at 296 pence per share. L&G is a group company with multiple revenue streams, including pension services, insurance, and asset management. With a dividend yield of 6.12%, the stock far outpaces the average of the FTSE 100 of 2.93%, and for good reason. The company is excellently run and has generated significant shareholder value over many years. While also maintaining a growing and healthy dividend, the stock is also up over 28% in the past 3 years. L&G has grown its dividend every year since 2012, except for last year as it decided to maintain its dividend through the pandemic, in a year where many decided to cut or suspend their dividend entirely. On the last earnings call, CEO Nigel Wilson stated that the company is ahead of where they were pre-pandemic. The share price currently does not reflect this and only trades at 13 times current earnings, making it a relatively cheap stock in a world of elevated asset prices. The company pays out dividends biannually on an interim and final payment date. Number 2 on our list of top dividend stocks is Barclays, ticker symbol BARC. As of this video, the stock currently trades at 187 pence per share. As a bank engaging in retail, wholesale, and investment banking, as well as credit cards, wealth and investment management, the company is well positioned given the current macroeconomic climate in a world of rising interest rates. Unlike most stock valuations, banks benefit from a rising interest rate environment. This is because their profit margins increase on their lending services. In December of 2021, the Bank of England increased base rates to 0.25% from 0.1%, after the Monetary Policy Committee voted in favour of the first rise in more than 3 years. The main reason for this rate hike was to curb rising inflation, and as banks have languished due to consistent rate cuts in the past few years, this signals the beginning of a momentum change upward. Like many other banks, Barclays were forced to suspend dividends and share buybacks during the pandemic to preserve capital and support the economy. This regulation has since been lifted, and banks have resumed distributions to shareholders. Barclays' initial dividend payout was disappointing at only 0.7%, but with a dividend cover of 8.8, there is ample room for dividend growth, and many investors expect increased distributions of returns to shareholders to stay competitive in a world where global counterparts have already made huge strides in this area. For example, in the third quarter of 2021, Morgan Stanley shocked investors by doubling their dividend to 70 cents a share. Most banks increased payouts during this time, however Morgan Stanley was the standout surprise in the Q3 earnings season. Will Barclays follow suit? Only time will tell. The company pays out dividends biannually on an interim and final payment date. Number 3 on the list is Seagrow, ticker symbol SGRO. As of this video, the stock is currently trading at 1,434 pence per share. Seagrow is an example of a stock with prudent management and a stable, reliable dividend. With a current yield of 1.59%, it is not the highest available, but the stock has an extraordinary dividend cover of 5.62. Not only does the company have room to grow the dividend as it is, but the fundamentals for industrial real estate investors provide further growth opportunity in the future. With a shortage of warehousing in the UK and ever-increasing demand by occupiers, rental growth and further progress in development pipelines will allow Seagrow to grow its top and bottom line, providing a strong backdrop for shareholders to receive a substantial and growing dividend. The pandemic led to a surge in demand for online and e-commerce activity and the need for distribution warehouses and fulfillment centers, and Seagrow, as the owner and operator of these properties, was the beneficiary. Currently, the stock is up over 100% from its March 2020 low. The company pays out dividends biannually, on an interim and final payment date. Number 4 on our list of top dividend stocks for 2022 is Shell, ticker symbol RDSB. As of this video, the stock is currently trading at 1,628 pence per share. As a major player in the energy space, Shell is also another stock to benefit from the wider macroeconomic picture. With the UK battling an annual inflation rate of over 5%, the cost of living, raw materials, and particularly commodities has increased markedly. This includes oil. With the resumption in demand in 2021 after global lockdowns crushed the oil price in 2020, the energy industry is benefiting from a commodity supercycle. Not many industries outperform in an inflationary environment. Many have their profit margins squeezed as the cost of their goods sold moves up due to inflation. Those with pricing power can pass costs on to their consumers to maintain margins, but nevertheless, they can still feel the pressure. Energy, along with industrials and financials, are cyclical in nature and can benefit from inflationary environments, which is why we have already highlighted financial services companies such as Barclays and L&G as top picks for 2022. With a rebased dividend that continues to grow, investors of Shell can expect a stable and growing dividend for years to come. With a current dividend yield of 4.19%, this is well above the FTSE100 average and looks set to grow substantially after quarterly distributions reached 24 cents per share in Q2 of 2021, a 38% increase from the previous quarter. In addition to this, with rising pressure from ESG mandates and responsible investing funds, less capex is expected from the oil majors moving forward, which allows for further distribution of income and returning that capital to shareholders. The share price is still well below its all-time high, currently down over 36% from prices seen in 2019. With further upside remaining as the world opens back up and travel resumes, Shell could be a solid income choice for a dividend investor, as well as providing share capital appreciation in the future. The company is unique on this list in that it pays out dividends quarterly, providing a more consistent income stream than others on the FTSE100. Finally, at number 5 on our list of top dividend stocks on the FTSE100 is Aviva, ticker symbol AV. As of this video, the stock currently trades at 410 pence per share. As mentioned previously with Barclays and L&G, Aviva also benefits from a rising rate environment, but there are a few aspects of this stock in particular that I think could make it better value for money. Firstly, it must be said that Aviva has a very attractive valuation. The stock trades at a PE multiple of 7.69, lower than any other choice on this list. This is mainly because Aviva has struggled in the past to achieve growth, and investors are not necessarily pricing in much growth in the future. This is where I think the market has got it wrong. Over the last 2 years, the CEO of the company, Amanda Blanc, has shifted much of the focus into its core markets, the US, UK, and Canada. With sales of business segments across Asia and Central Eastern Europe, Aviva has set its sights on its highest conviction markets to achieve sustainable growth for the long term. If the company can execute well on these goals, then Aviva will be trading at a significant discount to its competitors on the FTSE100, such as Legal & General. With a current dividend yield of 6.55%, the stock also provides one of the most attractive yields on the index. While it may not have the track record of L&G, I believe the valuation discount has this priced in and more. The company pays out dividends biannually, on an interim and final payment date. If you want more information on any one of these stocks, I have reviewed each of them in my Stock of the Week series, where I go into each stock further, looking at the financials, current catalysts, analyst consensus, and much more. I'll leave a link to each of those videos in the description below, or click on the banner in the top right hand corner to go there. So there you have it, 5 of the top dividend stocks on the FTSE 100 for 2022. What are some of the income stocks that you were invested in? Let me know in the comments down below, and if you got value out of this video, make sure to give it a like down below, and be sure to subscribe to Wise Wealth for more personal finance and investing content. Thanks for watching, and until next time, see ya.